Hey everybody, welcome to Trading Capital's Daily Analysis video. I'm your head market analyst here, Curtis Skelton. Jumping into the charts on this November 22nd. So it was a positive day for the markets today. The S&P is up over 1.3%. Now with today's action, I would not get too excited if you were a bull. Yes, it is an up day, but you're still inside of this consolidation chop. You actually filled a beautiful technical daily gap on your S&P 500 chart, but you're still trading under resistance. And the reason why I'm so confident in the sense that don't get too excited about this rally is you are coming, this type of float up has been on anemic volume once again, even lighter than yesterday's volume. So yesterday we traded 51 million shares. Today we traded 42.6 classic holiday hour light volume, which means that there's no real, even though the markets did go up, there was not really that many buyers buying up here. The only reason the markets float up is because there isn't really too many sellers at this point in time. But 43 million, or 42 million, 42.6 million in buying pressure to the upside is nothing really to sneeze at. And it certainly doesn't really get me too excited, because typically what generally follows lighter volume sessions is heavier volume periods, which typically see downside action, especially when you factor in that you are at resistance. Now, if we continue the rest of the week on this light volume, there is the potential that we float all the way up to these gap fills. But needless to say, that's still getting past these two resistance points is going to be a tough feat in my opinion. I mean, considering that these two little red bars are coming into about 95 million in shares traded. And then you also have a larger share of volume traded all the way back here on the charts that you're basically approaching. So to get past these resistance points with this exceptionally light volume is a little bit difficult from a technical standpoint. If we take a look at oil is interesting today because you basically saw that continued follow through to the upside. Oil intraday is pretty choppy. You can see this was your big reversal up move yesterday, and you've basically followed that through with a little bit of consolidation, breakout, check back to the consolidation point, and then you broke out again. And now you're retracing, but you're looking to put in a little bit of a nasty bear flag. This sell-off in oil is not really a healthy sign, especially so early on in a bull move. You basically pretty much negated this whole choppy consolidation period, and you're trading in that area, forming a bear flag, which could break down. The big level is if you start breaking this key trend line over here, connecting these pivots, which is basically, this is your reversal level where you've pretty much engulfed the downside move with positive upside. This is your big trend line to watch. You break that, then oil could be heading to this double bottom zone. I'm still in the camp on the daily chart that oil sees potentially maybe a little bit more upside, but I do think oil's still going to continue to roll over. We had it priced in that oil would tag this level, hit it. It's getting a bounce off of this level. I would not chase this, but there is a potential oil heads all the way back up to here and then starts to pull down. Now, I have priced in that 84 is a really big resistance level because that's where your breakdown really started and confirmed. So that's going to be a huge big level to test. If you get through 84, you'll have this downsloping trend line basically bearing down on you pretty quickly there. Natural gas, we almost got a short on natural gas. You can see I called for that final push up into resistance on natural gas. It did not hit our level. I did not want to take natural gas prematurely, even though it has had a beautiful move, all still technically inside of this bearish longer pattern. Natural gas, I still think can retrace and needs to fulfill this retrace back to this trend line, connecting your pivot. I would like to see it hit that level or even pierce it for us to continue to look to potentially short natural gas. Now tomorrow there could be a little bit of a final blow off top on natural gas, and then I will execute the trade for a quick swing trade short via probably the KOLD. But needless to say, in terms of if natural gas does push through, this might be a very, very quick trade, because typically when you hit a big time resistance level in a little bit of a short-term overbought condition, you're basically going to reverse pretty sharply, or that's at least in most cases the technicals prove to be pretty good resistance. Let's take a look at gold. Gold is basically still consolidating. Even with the dollar falling, gold is still basically sold off from the highs, but it did eke out a small little gain. Gold still has not retraced back to support. I still have it priced in that if you're most likely going to get a retrace back to this trend line over here. You can see this is where your trend line bounced. You came all the way up. You bounced off of it again, formed a bear flag, broke through that red trend line, came all the way back up to test it, couldn't confirm above it, failed, put in a little bit of a base, and now you've confirmed above that trend line, and it's very likely that you're going to break, retrace back to the 1715, 1716 level. That'll be a healthy level to buy. The sell-off in gold is still technically bullishly consolidating, so we're potentially looking to buy the gold on the next pullback. Let's take a look at the DXY. Obviously, if we're looking at buying gold, we're going to assume that the dollar may have some more downside. I still think in the next couple days or so, we still see potentially a dollar rally to the upside. I still have a short-term intraday bullish pattern that is still technically intact. We have broken a key trend line over here, so which is currently on watch. But needless to say, the big trend line that we don't want to really break is this red trend line over here. So you can see we're hugging that level now, but you are in an oversold short-term state. And if the dollar continues to get a bounce here, it will look like we'll hit that 108.80 objective, or even a little bit higher at the secondary target of 109.80. So potentially still just above another $1.50, $1.60 in potential upside for the dollar, which makes a lot of sense if you think where gold should pull back to. So if we have another potentially, $1 or $2 upside in the dollar, it should give us that retrace on gold, which is what we're looking for. So just the way those two assets correlate, we're just going to be patient. It's very, very, that's the name of the game with this trading. If we take a look at the 2-year yield, yields were under a little bit of pressure today, but coming off of the lows significantly. So this to me is still bullish price action. Basically after yesterday's video, I said we confirmed the technical recapture of this trend line. Most likely we're going to see a pause or 2 pause days in yields, and then potentially more upside. So far we've had 1 pause day. You can see yields basically took out this low, but rallied off of that low, so that is super healthy to see. And it's interesting to know on yields is that you do have a technical gap to the upside around 4.55, as well as an hourly gap down here around 4.481, and another one down there. But I do think that you're going to fill the upside one before the downside ones occur, just due to the fact that you showed significant buying pressure, basically, or selling pressure in the bond market when the yields basically drop down to this level. So let's just keep an eye on the US 2-year yield. So far it is signaling that the Fed is going to raise by another 0.5%, which will basically bring the Fed fund rate in line with the 2-year bond yield, which is what is needed to occur in a true economic cycle. That's generally what happens. Let me just see if there's anything else I can touch base on. Bitcoin, we'll take a look at Bitcoin. Bitcoin obviously got a pop today along with the market upside. So Bitcoin's still forming that bear flag. The interesting thing about Bitcoin is that you had this trend line, this key bottom of the bear flag trend line, where you pop through, looked like you were recapturing, but the sell pressure is slowly taking you down and down. It'll be interesting to see if we close below that trend line again. My assumption is that we're probably likely to close either on it or below it, but let's just wait and see in 2 hours and 48 minutes. There's nothing really that have changed my stance on Bitcoin. We're obviously still short. You're still forming this super bearish pattern inside of another longer bearish pattern break. So the big question is, when do we get that daily close at the low here, which confirms the breakdown? As soon as we get that daily close, we could see a sharp move down to basically the 12.5 area before we see the next little bit of support or basing consolidation zone. Really, that's about it for today's video. Obviously, again, to sum up the rest of the week, the S&P, we're still at major resistance. The buying volume is not really impressing me at all, considering how light it is. We're still underneath the 200-day moving average. We have not tagged that, so maybe that's potentially what we need to do, is tag the 200-day moving average at the double top zone. Maybe we also need to potentially retrace to this original head and shoulders neckline break. But again, let's just take it day by day. I still think we're in a great position being net short this market at the resistance. I still think even at the minimum we're going to get an eventual fall down to this 373. That's a big technical gap on the chart that I do think will be filled. And then at the very low end of the range here, at the minimum, I still think we get this fake gap fill print over here. This gap fill, this fake print, on the daily chart here, never ever happened. That still leaves me a little bit unsatisfied on a technical basis, being the fact that gaps fill at around a 90% ratio. So let's just continue to wait and see. Obviously, as we head into the holidays, that light volume may continue to occur. But also, if we factor in what's near approaching is the Federal Reserve meeting, that should also be a little bit concerning, considering we've had a substantial rally off of the lows here up until where we are now. Yes, inflation has come down slightly, but the Fed inflation is still entrenched at around 6.8%. So that's certainly far away from where the Fed will even consider stopping the raising interest rates. They'll continue to have interest rates at these lofty levels. Even if they pause, they'll certainly not cut rates, in my opinion, up until they see inflation severely probably approaching that 4, maybe 3% mark. But anyway, that's pretty much it for today's video. Let's see what happens in tomorrow's market session. We did add a little bit of extra shorts today, but nonetheless, let's just keep accumulating short positions on this market for the most likely inevitable downside that is set to occur